This session is designed to equip us with practical knowledge on how to manage money wisely, begin building wealth, even as students and young adults or young professionals, and also to make smart financial decisions early in life. So before we begin, a few housekeeping rules. Kindly mute your mic once you join us for the duration of the webinar. In the course of the session, we will open a Q&A session where you can ask any question on your mind. Also, if you have any question, please do not hesitate to drop it in our chat box. Our speaker will be ready to answer all your questions. We'll also drop a link to a survey at the end of the webinar. So we'll urge all of you, few questions, about 4 questions, we'll urge all of you to fill out the forms for us, feedback for us to improve on our webinars. Catherine Ekar has worked in the financial service industry for over 18 years. Her experience ranges from roles in the mortgage industry, retail banking sector, and currently in the wealth management and investment banking space. Whether it's leading financial literacy courses for pupils in charter schools or planning and delivering credit building seminars for Francophone immigrants, her passion has been firmly grounded in providing financial advice and exposure to those marginalized. Catherine holds a BSc in Business Administration and minors in French and Legal Studies from the Ekar College in New York. She also has an EMBA from the University of Ghana. She's proud of her alma mater, St. Rose's, and alongside Formidable Sisters, devotes time and effort on the executive board to building engagements within the alumni group and current students. She enjoys reading, dancing, but although she performs poorly in dancing, she loves cake, fast driving, and lazy walk on the beach. Ladies and gentlemen, help me welcome Madam Catherine Ekar. Catherine, we are ready for you.
Thank you so much. Good evening, everyone. It's a pleasure to be with you, and I'm so appreciative that you've taken some time out on your Wednesday evening to be with us and to learn some tips. And hopefully I'm able to impart onto you, and the things that you learned today, you'll find them valuable in your personal lives. So I think somebody needed to mute. So yes, so thank you for sharing a bit about me. But most importantly for me, it's so inspiring to see the work Drive to Inspire Africa has been doing. And it's a privilege to be on this platform. I'm glad to be here, and I hope that everything I share with you, you'll find it valuable. If I can be allowed to share my screen, we will dive right in. I think the housekeeping rules were pretty simple. If there are any questions, you can pause, ask me, or drop them in the chat box, and I'll address them as the presentation goes on.
Catherine, you're allowed to share your screen. Okay.
Great. So just give me a heads up if you can see my screen.
Yes, we can see your screen.
So the topic for this evening is foundations for building a strong financial future. Some smart steps for us today to build a wealthier tomorrow. So just an overview of what our discussion will cover. We'll talk about why financial foundations matter. We'll have a brief overview on budgeting and cash flow management. We'll also have an insight into how to build an emergency fund. And obviously, it's so important to understand the relationship between time and money. and of course, insurance, so we can protect what we've built. And then at the end, questions and answers from you would be welcome. So now if we talk about why financial foundations matter, I'm sure many of you have walked by a construction site, and the first thing that happens is a hole is dug and the foundation is set up. And it's the unglamorous work. You don't see anyone walking in high heels. You see boots. It's dirty. It's hard work. But if it doesn't get done, you can't get to the roof. You can't get to the nice fixtures. You can't get to putting in your beautiful tiles and your marble countertops. This is the hard work that needs to get done before anything else superfluous happens. So it's so important for us to talk about the foundations of our, building the foundations of our finances and just understanding the basics and the pillars that are so important to make sure that we achieve our personal financial goals. I think one of the main things when we talk about why it's important to build our financial foundations is to avoid financial stress. When you plan better, you are less stressed, you are less irritated, you are able to respond better to different life events. Of course, emergencies will happen and come unexpectedly, but when you have a solid foundation, you are set. When it rains, these are the months where we experience a lot of rains. And so if you don't have a solid foundation, if you don't have a solid house, what happens? The wind will blow you away, the rains will take your property away. So it's important that we have this solid foundation. And of course, what are our personal goals? Someone asking a question? Okay. What are our personal goals? What do you hope to achieve? If you don't have a foundation, how can you even think or dream of attaining your home or any of your personal financial goals that you have? And of course, building lasting wealth for yourself, your family, and future generations, if that's in your plan. So I think it's a no-brainer for us to understand really why this matters. Now, often in discussing your finances, we narrow it down to personal finance, right? And when we think of personal finance, it's most important to understand that it's broken down into two words, right? There's the personal aspect of it, and then there's the finance aspect of it. So when we talk of personal, that means it's peculiar to you, it's individual, it's unique. It doesn't have to look like another person's, right? So when you think of your personal, how do you define it for yourself? Does it mean you and your siblings? Does it mean you, siblings, external family, parents? Everybody's personal will look different. So in deciding where to start, it's really important to draw up what personal means for you. And then when we talk of finance, of course, anything that involves money, its flows coming in, going out, what banking, where you are banking, whether you have insurance or not. If you're going to borrow, are you borrowing with a credit card, car loan, mortgage? What borrowing options are available to you? What are the cost implications of those? What do you want to invest in? So you're thinking different investment products. Are you looking at savings accounts, fixed deposits, treasury bills? Are you looking into the equity market? What are you thinking about when you're talking of investments? And again, retirement, because so far as you're alive, I mean, people always say there's two things that are certain: your birth and your death. Retirement falls in there somewhere. So it's important to plan for that. And one thing as well, when you're working, you must pay Uncle Sam, and so taxation issues. So putting those two together, how do you define your personal unit, and what do you have to consider when you're thinking of your finances? And it's very broad, and a lot of people want to narrow it down to maybe just your salary coming in and the bills you have to pay. But it's important to look at the broader scope of what one's finance looks like. So when we talk of money inflows, I know this audience is relatively younger, but for a lot of us, our monies come from salaries. if you're earning commission, you can get an income that way. Some inherit money. Others have income from investments, so you can call that interest income. Others are earning income from rental income as well, donations, right? I'd like to pause here and see if we can ask anybody that's in here to tell us, are there any additional ways that people can earn money or have money come to them? Any takers? You can drop in the chat box as well, or just raise your hand and then just speak. Are there any other sources of income, other sources of getting money? I was told Drive to Inspire was not a shy group, so I'm waiting for someone to share with me.
Well, in the world today, I guess you could say gambling as well.
Yeah. So people can go take risks to earn income, right? I was thinking with having so many young people on the call, we would say social media. Now, being an influencer is a steady way of earning income. But you see, when you look at the inflows, you're kind of limited. But when we think of money outflows, it can go on and on and on. The different things you can spend money on. If we are thinking, I'm sure we'll get a bit more answers from that. Money inflows are pretty limited, but the outflows are unlimited. And if you're not able to manage this dichotomy between the inflow and the outflow, you'll be found wanting, because money has a funny way of disappearing, evaporating really quickly. And I'd like to share this short video. I hope you're not too young to know about Michael Jackson. So, okay.
This table, this chess set.
It's only 89,000.
So good. About this one, right? Yeah. That's the soul sign means for me. Did we get those? Why don't we order those?
You don't have space for all of this.
Yeah, I do.
You've got space?
Yeah.
But in the house in Netherlands?
No, this would be for another house.
Oh, for another one?
Yeah.
Okay.
We bought these, right? And these.
You like your own, don't you?
Yeah. And these, this table. These, right? These?
Yes. Oh, that's only 275,000 each. That's $500,000 for those two.
Procrastination isn't your fault.
All right. So, what were some of the takers for anybody on watching this 45-second video and seeing how quickly?
Catherine, please, we couldn't.
Were you able to?
No,
Oh, you couldn't see the video?
Yes. So if you can restart it.
Okay, sure thing.
Thank you.
Okay. Are you able to see my screen?
Yes, we can see your screen now. Yes.
This one, this table, this chess set.
It's only 89,000.
It's so good. About this one, right? Yeah. That's the soul sign means for me. I put that in my list. Did we get those? Why don't we order those?
Space for all of this.
Yeah, I do.
You've got space.
Yeah.
But in the house in Netherlands.
No, this would be for another house.
Oh, for another one.
Yeah.
Okay.
You bought these, right? And these?
You like your own, don't you?
Yeah. And this table. These, right? These?
Yes. Oh, that's only 275,000 each. That's $500,000 for those two.
Okay, so can anyone share some of the things that stuck out in watching that video? Feel free to drop in the chat box as well. Okay, someone said he spent as if he knew he was going to die young. Yeah, that's true. Okay, another one said impulse buying. Yeah. Does
He
that
never
happen
even
to us
considered
sometimes?
the prices of the items. He was just picking stuff.
Yeah. He was just picking. He didn't even check the price, right?
Yeah. Uh-huh.
Someone said spending money with ease without overthinking costs. Yeah. Really interesting. As much as he did that in less than a minute, many of us can't even dream of spending that in a lifetime, right? But what was easier to spend the money compared to the time taken to earn it? Yeah, thank you for sharing, Kalundi. Exactly. I'm sure the hours he spent in the studio, practicing his dance moves, learning his songs, the lyrics, the band working with him, he spent as if, that didn't take as much time. But we all know that the earning is much harder than the spending, even for somebody as wealthy as he is. Okay, so I'm back to sharing my screen. So we all saw, even with Michael, that his outflows were just going, right? And the main idea of this is to make sure that we manage so that yes, if you're going to spend like Michael, you make sure that you're earning like him. And if you're not, then you want to exercise some control. All right. So I think I skipped. Okay. So if anyone had to guess, how many people in Ghana do you think currently don't have a savings account?
I'll say 90%.
Okay, somebody said 90. Any other takers?
35%.
35%. Any other takers? Let me check the chat. Okay, 90%. More 90s. Okay. Another 35. Okay. So in the recent poll, it showed that about 35% of people in Ghana don't have savings accounts, or don't have savings, not savings account, don't have savings. But when I put 90% there, it strikes a lot of people, because you wonder how many of us are really saving to an amount that it makes us feel comfortable. How many of us really have that cushion, have that emergency fund? And again, some of the metrics in Ghana, we question them sometimes, but 35% don't have savings. So having savings means you could have 5 cedis saved right? You could have 10 CDs saved, but is it enough to really get you to where you need to be? Chances are probably not. So I'll take us through a little bit about budgeting and how to manage our cash flows. Okay. So previously we talked about inflows versus outflows. When you're going to start thinking about how to manage your cash or your finances, the first thing is to really track how much do you have coming in? How much do you earn? How much do you get as allowance? How much do you get in scholarship or stipends? How much do you get from commissions? How much income do you have coming in a set period of time? So you can use a month or a week. And then you want to compare that with how much do you spend. That means how much do you spend on your outflows? How much money leaves you on a month-to-month basis or week-to-week basis? And then you create a budget that suits you. Based on what you have coming in, you start. How much do you want to spend on, let's say, transportation? How much do you want to spend on food? How much do you want to spend on clothing? How much do you want to spend on entertainment? How much do you want to spend on communication, your credits, your data? How much do you want to spend on subscriptions, Netflix, Apple Music, and all the others? And then just strike the balance that works for you and track it. Now, when you talk of budgeting, everybody thinks it's so old school, it's so unglamorous. But you can't get anywhere without having a solid budget. Remember the picture at the beginning where we saw the foundation being built? There was no glamour, but it was so needed to get them to the next level. So if you don't have that solid foundation, meeting your financial goals, meeting the plans you have for yourself in the future will be a big challenge. And in these days, you don't even have to use necessarily an Excel spreadsheet or have a long Foolscap page to be doing that. There's lots of apps that you can download. A lot of banks have tools that you can use. And so make sure that you're using whatever feels comfortable for you in working out your budget. And of course, create a buffer in your budget. And I'll talk a bit about that in our next slide. So these are just a couple of examples of what your budget would look like. Now you see in the first column, we're talking about itemizing everything. Those are your inflows and your outflows. So your income, your expenses, what you're saving, and then you total it. And then the budget amount. So that means what do you expect to spend in that month on that category or that itemized line? And with your budget, what's really important is to actually track what actually happens, right? And then note the difference. And it's important to maybe have a little note section so you can write what peculiarities happened in that month or to justify that expenditure or to justify that extra income. So for example, what was your stipend for this month? Let's say 1,000 CDs. You would write that down as your 1,000. You're expecting 1,000 CDs. You'd write that down as your 1,000 CDs. When it actually comes, you'd write down the actual amount, which was 1,000 CDs. When it doesn't come, or it comes either more or less, you write that amount down and you put a little note as to explain why it would go up and why it would go down. Give me 1 second. Let me. Sorry. Apologies. All right. So you write your income line down, what you expected to come in and what actually came in. Your expenses. So for example, if you budgeted to spend 500 CDs on data in a month, you want to write what you actually spent in a month. So if you bought data 50 cedis this week, next week you bought another 70, every time you're spending, you want to note it down in your budget. So either in your notebook or your app, you always want to track it. If you bought fuel, you want to write it down. If you paid a bill, you had a medical emergency and you paid a bill, you want to write them down. And of course, there will be other things that may pop up and you also want to notate them. Now, when I was talking about a buffer in the previous slide, what that meant is if you say you want to spend, the way you've planned it, you want to spend 700 cedis on transportation in a month. We understand that there may be fluctuations in the price of fuel, in the price of transportation from Uber to Trotro to, just different ways that you transport yourself. So you want to not exactly leave it at 700 cedis. You want to give yourself a little buffer. So you can make it 750 so that it's not straight jacket. Again, this is, you want it to be as realistic as possible and something that you can actually adhere to. If you're paying your tithes or your charitable donations, you want to plan for them so that you're actually able to meet those obligations throughout the month. Again, as with anything, any goal that you're setting, you want it to be smart, right? And so how specific is your budget, right? What are the goals? What do you need to be comfortable? What expenses can you take out or add in because you know realistically you will spend them? And how do you measure? Assign real goals for some of the key item lines. Now, if you're planning to buy a laptop or a new phone, how much do you want to spend on this? How much do you want to budget every month to put aside to meet this goal? And how can you really track it? So you can't just say, I want to buy a new phone by December. How much does the phone cost? What do you have that you can assign month on month to get to this goal by the end of December? How achievable it is? Is it something that you can afford? Is it something that fits within your means? Make sure that you're not dreaming too big. Everybody should dream large, but you have to have your feet planted on the ground. And so same thing with your budget. What are the goal items that you set for yourself and how can you achieve them? And how relevant and realistic are these to you? If you want to buy this phone by December, is this something that you can do? Or let's move it from a phone to a laptop. You want to buy a phone and a laptop. Is it possible to get both by December? Probably not. Can you get maybe the laptop this year and push the phone to later? Which one is more important, right? So it should be relevant to what your needs are. And of course, setting timelines. So for this case, we're using December, but you may have longer term goals. What are you planning to do in, let's say, the next 2 years? Are you planning to start a business? Do you have plans to start building? Do you have plans to start a charity? What do you want to do long term? Do you plan to own a home? Are you planning towards retirement? You want to start now, but it's a long-term goal. What are your plans and your actionable steps that you're taking to make sure that these goals become reality? We spoke about how to build an emergency fund. There are various kinds of emergencies that could come up. You can list them from having an accident, to losing your job, having changes in your earning income and your earning capabilities and all of those. So you want to be planning to have secure an emergency fund. What we plan is, so you see how you planned your budget and you saw what your incomes were and what your expenses were. Now, what are those expenses month on month? It's ideal and recommended to at least have anywhere between 3 to 6 months of your expenses kept in a savings account that can easily be accessed, right? You know, there are different types of savings. You can have a fixed deposit, you can have an actual savings account, but it should be something that you can easily access. If it's, for example, in a fixed deposit, depending on the tenor, you may have to wait 182 days, 91 days, and that may not be able to suit your needs, or you may have to wait to disinvest if it's in a mutual fund and all of those things. So really important to have something that is liquid. Again, you want to start small in building this emergency fund. As much as it's critical to have one, you don't have to have exactly all 3 months of your living expenses at once. So take your time, build it gradually, set a certain amount that you pay month on month. Make sure that when you're in crisis or an emergency situation, try to avoid borrowing as much as you can, because emotionally and of course in times of stress, you may end up taking any kind of predatory loans available and finding yourself in a bind when you have to pay back. So as much as possible, when an emergency situation comes up, try to make sure that you are not borrowing or limit borrowing in that time of stress. We'll talk about how important it is to start saving and investing early. The earlier you start, the better. You know, people start saving for their infants the minute they're born. When their children are in school, the savings plans for children, young teenagers, make sure that you start as early as yesterday, mainly because you want to, you know, take advantage of compound interest and make sure that you're supercharging your savings as much as you can. Think of diversifying the different ways. Think of diversifying your savings and investments. Don't just do one thing just because it feels comfortable and safe, but try to spread your tentacles and do different things at different times, just to make sure that you're taking advantage of all the things that are available to you. Again, you want to pick these options based on your personal goals and your risk tolerance, because as much as you start any savings plan or investment plan, it has to suit you. And if you're not comfortable in the product, then it defeats the purpose. I'll share with you how I talked about how you want to supercharge your savings. And this is just a graphical example of how compound interest can really change a simple savings balance into something really great over time. So in this graph, you see the person is investing, let's say, or has about $6,000 to put aside. And you notice if you don't do anything with it, in 30 years' time, it will still be the same 6,000, nothing happens to it. If you invest it and you're earning simple interest, over the course of the time, you notice that yes, your money is growing, but not at such a rapid rate as compared to compound interest, right? And so in this graphical depiction, you see how compound interest really makes a difference between either earning an additional $6,000 on top of the initial investment, to doubling it with simple interest in about 30 years, to getting to about almost 18,000 in the same amount of time based on compound interest. So what this shows you is the earlier you start, the better. And you can see the gap widens as time progresses between simple interest and compounding interest. So this is just a graphical depiction for you to just see what compounding interest looks like, and making sure that you're making as much as you can from your initial investment as possible. Now, for us, we all have 24 hours in a day, and how you spend it, we hear it all the time, time is money. How you spend it is so critical to make sure that you're securing yourself for the future. Finding a job, finding an extra source of income is important so that you're maximizing your 24 hours as much as you can. Making sure that you're not wasting time, let's say on social media or non-productive items. Make sure that you're measuring your productivity in your 24 hours, right? We all have the same 24 hours, but how we spend it is very different. Now, I'll share with you just a quick formula, and you can do it with me. If you can use your calculator on your phone. You want to write down or put down how much you earn on a month-on-month basis, right? So if you're a student and you have a stipend or an allowance from your family, that would be considered your monthly income. If you earn a salary, you want to write that down. If you're somebody that is self-employed and earns varying amounts month on month, let's work with the smallest amount and divide that amount by 160. And that gives you just an approximation of what an hour of your time is worth in CD terms, right? And this is, for a lot of us that do this, it's always jarring and it always feels very unpleasant to think that that's what an hour costs. But it helps you to juxtapose your spending versus your earnings versus the time you spend on non-productive activity. And I think this is really something that for anyone that's young and that's about to start life, you really want to take this into consideration. Now, in this example, we used Ama's take home of 2,500 cedis a month. And the calculation came up to about 15 cedis and 62 pesos. So what that means is every hour that Ama spends on TikTok, if she were working or earning, that could be 30 cedis, 32 cedis, 31 cedis. So, or if you're going to make a purchase and you want to understand, can I afford this? How much does it cost in relation to how much I'm earning per hour? These are the things that are to just keep you in check, keep you building that solid foundation that we talked about earlier, and making sure that you're living within your means. Again, it's also a good time if you're working to have a discussion with your employer about maybe a promotion, taking on a different role. It's a good time to see if this could be a chance to start a new business that you've been thinking about. Again, you want to make a cost-benefit analysis to make sure that it's the right thing for you. But these are some of the things that you want to be using as your yardstick when you're to pull you back in check, to make sure that the foundation is stable, that the foundation is straight, and will allow you to keep building up on it. We've spoken about having your personal finance, understanding what it means to you personally. We've talked about how to create your budget, make sure that you're achieving the goals that you've set for yourself in terms of finances, how much you're putting aside for savings to buy either your property, your phone, all of those things. If you're working so hard to build this foundation and you don't have it protected, what tends to happen is you could lose it. A lot of times the discussion stops at creating your budget and making sure you stick to the budget and making sure you track all your expenses, your inflows, and then we forget about insurance. We forget about covering what you've worked so hard to build. Your car insurance. I know a lot of people, if it was not mandated by the law, they would not insure their vehicles. Insuring your home. Do you have legal documents that protect what you own? Who have you set up? Do you have a will? A lot of people don't want to talk about wills because they feel that it means you're discussing death or you're welcoming death. But what it means is you're putting plans in place so that the things you care about the most are well taken care of. Because I'm in the banking space, I have seen random places where people write down their PIN numbers to their debit cards, their access codes to their internet banking. Keep this secure. We've seen Momo fraud go on the increase and all those kinds of fraudulent activities that keep happening. It's really important that you keep these things secure and you don't share your passwords with anybody. If you're building your wealth and you're not protecting it, you might as well be pouring water in a sieve, right? Or in a basket. So really make sure that you're protecting yourself. there's all kinds of insurance available. Make sure that you take your time to understand which one fits you and then sign up for it. It may be a pinch now, but it would save you down the line. And again, you don't want to be working in vain or earning in vain for any of life eventualities to take you back to square one because you were careless with your Momo pin and somebody entered or somebody got your card or you had a health emergency, and because you didn't have health insurance, you needed to cough up all the money in your savings account to help you do a procedure, right? So make sure that you're protecting all the stuff you've worked so hard to get to. I'll share just 3 golden nuggets with you, and then we'll be open up for questions. Again, money doesn't define you, right? So you could have a lot, you could have a little, but it really doesn't determine who you are. Whatever foundational habits you have now in terms of managing your funds will grow with you as you continue to earn more. So make sure that you have these safeguards in place, and the habits that you're building now will be what will catapult you to the next level. Again, your budget is a living document, right? You can tweak it as you're earning more. You can tweak it as you're earning less. You can tweak it to make sure that you're spending less in certain categories. You want to make sure that you're on top of it and make changes as and when. And of course, time is money. Understand the value of your time in money figures and make sure that you are using your time wisely and not wasting it. If it's studying to get your degree, to get that job, you want to make sure that you're maximizing your studying hours. If it's a second job that you do on the side, make sure that you're using your time effectively to earn that second stream of income. And even rest, understanding that you must rest and be well balanced to be able to do your best, and factor all of that in. Minimize the social media, minimize the idle chit chat, spend your time in reading books and gaining knowledge and expanding yourself to the best that you can, and make sure that you're taking advantage of as many opportunities that are available to you to grow yourself to be the best that you can be. And that brings my presentation to an end.
Thank you, Catherine. Thank you very much. We will take some few questions. So if you have any question, you can raise up your hand and we'll call you, or you can drop your question in the chat box. We'll read it and our speaker will answer you. Thank you. So the floor is open. You can raise your hand up and ask your question. Thank you. Ifya Boatma, you can go ahead with your question, please.
I see a question in the chat box if Ifya is not ready. It asked why she's not able to unmute. It asked why I divided the income by 160. Sure. We generally work about 40 hours a week. Okay. We work about 40 hours a week, right? And there's 4 weeks in a month. So that's why I use the number 160. I hope that answers. Is there a way to help unmute Ifya? You're welcome. Okay. What are some of the ways one can invest their money? Sure. So Again, there was a slide where I spoke about what are your goals, what are you trying to achieve, and then again, what's your risk appetite or your risk tolerance. The more risk averse you are, that means you're afraid of taking risks. The more you'd want to look at things that are more secure and more safe. And once you go towards the safe side of the investment spectrum, that means the earning potential may be lower. So some of the options available to you are fixed deposits. So that means you give your money to a bank for a certain number of months, and the bank will pay you interest on that. That's a fixed deposit. So you can give it to the bank for 6 months, 3 months, and they will tell you, okay, for this amount, we will give you 5%, 10%. And so that's one great way to invest if you're not looking for risk. Your returns are guaranteed. So whatever the bank tells you, you will earn after 6 months is exactly what you would earn. There are other options of investments, treasury bills, similar way. You give your money to the government. There's a time frame on it. The government promises you 15% on your investment in 91 days. You come back, you get exactly that plus the interest. You can also invest in the equity market. That means you can buy shares. You can buy MTN shares, Fan Milk, GCB, any of the financial institutions, any product that interests you or that you feel aligned to, you can buy into their equity. And what that means is now you're a shareholder of the company, so you own a bit of them. And so when they earn profits, they will share with you in terms of dividends. So that's one great way for you to invest your money. There are mutual funds as well and others. So really important, you can visit your bank, have them disclose to you the different options available, find out where your risk tolerance lies, and then pick something that suits you, right? Okay, so I see the next question, which was, if you earn mainly by receiving monthly allowance from parents, how do you calculate how much you are worth per hour? So exactly the same formula, but you have to understand, Ifya, that you're probably not paying a lot of other expenses as somebody who isn't on a monthly allowance, right? So when it's time for you to buy clothes or pay for other things, I'm sure your parents are also supporting you. So whatever amount you're given, divide it by 160 and you'll get that figure that we're working with, or the one that we use in the example for Amma. Okay, what of the friends that always come borrowing time after time? Some pay and others do not. How do we deal with them without being stingy? Okay, so again, one rule of thumb is make sure that you're given what you can afford. So if you have your budget, right, month on month, and you know how much you spend on food, you know how much you spend on transportation, you know how much you spend on data, you give yourself that little breathing room and you know how much you have in savings. If a friend comes to borrow and you don't have, or you look at your budget and you see, okay, so if I'm going to give this friend, that means I'm taking it away from which of these categories? Am I taking it away from my transportation? Can I afford not to move from point A to point B and give this money to somebody, right? And once you start looking at your budget before you give to the person borrowing, you may notice that you may not be able to lend at the time to your friend. One of the biggest superpowers is the ability to say no. And saying no does not mean you're stingy. It just means you're being cautious and you're living within your means. And also remember, you may have that money at that point in time, and next month you may have a need for it. Would you be able to go back to lending? Again, lending is set for the banks and the savings and loans, not for individuals. So try as much as possible to stay away from lending. Again, are you lending? Are you going to collect interest? Will you remember? How do you go asking for it? Leave that job to the banks and the savings and loans, and just explain to them that no, you'll not be able to do it this month based on your budget, and you can't do it. So, one of the first things little children learn to say is no. go and sleep, no. Eat your food, no. Turn off the TV, no, right? But it's such a superpower, and the more we grow, the harder we find it to say no. But you have to learn to say no. But if you look at that budget strongly, you'll find your answer for the no. So taking a loan, it will fit into an inflow. But again, a loan is not free. It comes with costs. It comes with interest charges, other ancillary or miscellaneous charges from the banks, which will now act as your outflow. So a loan coming into you is an inflow, but you want to make sure that per the loan agreement, you're calculating your outflow based on the monthly repayments that are required. So the principal plus the interest. So a loan actually fits into both places, but when it's disbursed to you at that point in time, it becomes an inflow, and when you're making your repayment, it goes into your outflow. You're welcome, Ifya. You're welcome, Solomon. Also provided my current situation as a student at the University of Zambia. How can I personalize the smart system to find correct savings products that suit a third-year electrical engineer? Not only that, I'm a part-time worker at a metal fabrication workshop and keep about $20 per month. What compound interest product does the FirstBank of Ghana have that can make me have sustainable, measurable, accessible, and time-based mode of investment? So thank you so much for your question, and I'm so impressed to have somebody all the way from Zambia on our call. One of the first things I'll say is when we talk about personalizing your system to find your savings product, the smart system is about how you build your budget, right? And to make sure that your budget is smart. So, how specific is it? How can you measure it? And all of that. So that's for you building your budget and your financial plan. Now, when you're looking for what correct savings product that suits you, you're very specific here. But what I would say is go back to what makes you feel comfortable in terms of your risk tolerance, how comfortable you are in terms of if you lose the value of your investment, which I think as a student, that would be high risk. But you also want to understand that the younger you are, the more risk you can take because you have more years ahead of you to recoup. But definitely sit with something as specific, you $20 per month as your saving. You want to sit with a personal financial advisor, and you can work on it. I won't be able to give you an exact product based on this. We'd have to look at what other expenses you have, how you're saving this $20, and again, what your time frame for this. If you're a student and you're in third year, that means you're graduating soon. This could change within a year. Are you going to be able to get a job within a year? And with this part-time job that you're doing, all those things would have to come on. But I'll definitely share my information will be shared, so you can definitely reach out to me so we can take this offline. FirstBank Ghana does have a lot of savings depending on what you want to do. So we have your regular savings accounts, we have prestige savings, we have a lot of different products that people can take advantage of. So this will definitely be one of those questions that I'll take offline. So again, it's your personal finance, so we can discuss it one-off. I think there's a hand up. IAG, if you're able to unmute, you can go ahead. Any other questions or? I think I missed a question from Jacques Mwale. For risk lovers, what would be the recommended time frame of maturity on first-time investments? Okay, so even for risk lovers, picking a time frame could also be interesting, right? You could pick a product, but how long do you want to hold it? If you, the riskiest is if you are going into equities, right? You don't know how the company would perform over a period of time. So it's up to you to be monitoring the market. So a lot of risk lovers are constantly watching the trade systems to see what their stocks are doing like. And so at any point in time, you can buy in or sell out. And so there's no real time frame on maturity for first. I mean, if you're a risk lover, you want to go on the far end. So you're thinking equities, and there won't really be a time frame. You can buy into a stock today. 3 days from now, it triples in value. You can sell it and make all that money. But in the same 3 days, it could dip by, you know, and you'd even get just one peswa left on it. So there's no real recommended time frame. It's based on the product that you pick. Again, if you're going into the equities or stocks, you want to see the performance over the past few years and see how well they do, see if there are any trends you're noticing, and then jump in when you feel like you can, right? You're welcome. Can I know by reactions how many of you did the little calculation to see your hourly worth? Again, it's an approximation, it's not fixed. So can I know by reactions how many of you did it? Okay. All right. I see Wendy did it. I see Al. I see Ayeji did it. I see Amma. Again, it's just a guideline, right? It's just a guideline for you to see where you're at. I see Benedicta did it. I'm glad. I see Isaac was able to do it. It's a rude awakening, right? And you can check on your phones. I do it and I'm often shocked. And see how your phone will tell you how much time you spend on your phone in a day. And it's on things that may or may not bring you value. So really make sure that you're monitoring that. I see Doreen's hand up. Is there a way you can type your question, Doreen? Or unmute yourself? Okay, for the hourly calculation, what in particular, you want me to go over how it works? Okay, so Doreen, the first thing to do for this is you want to see what your monthly inflow is. So whether it's a salary, everything that comes to you, write all of it down. So if it's your salary, your commissions, all those things that come into you for in a month, and then use 160 to divide it. And that should give you the estimation of okay, so I see Pauline was asking, yes, so in Ghana you have mutual funds, collective investment schemes. So what that means is a mutual fund, you're investing with a fund manager, and what they do is they pool funds from different customers, different clients, and the fund manager will make a decision on what to put into that fund. And it could have equities, it could have some fixed income, it could have some treasury bills, other products in there. And the fund manager tells you, hey, give me your funds, I will make the investment decisions for you, and I will try to get you X amount over a year, or my plans for this investment is to make sure that I'm beating the 1-year treasury note interest rate, right? And so there's a bunch of those. There's different companies that offer them, Tessa Capital, Data Bank, a lot of others, EDC. So those are places that you can go and buy into some of these mutual funds or collective investment schemes. Again, some people consider some of the insurance plans as investment opportunities. So you can meet with your insurer and ask them if they have investment options. So those are the ones off the top of my head that I can share with you. Oh, Doreen was reacting to the calculation. How do you feel after I... Okay, and so I think Ayeji is asking, how different is your buffer from your contingency in the budget? Okay, so the buffer, you would add it to each item line. So for example, if you know what you spend on food is 100, like you calculated, or what you plan to spend on food is, let's say, 175 cedis. Instead of putting exactly 175 cedis in your budget, you probably could round it up to maybe 185 or 190 cedis, just to allow you to, you know, depending on fluctuations or inflation, to make sure that you're not in a straitjacket in terms of what you're spending on that category for food in a month. Now, your contingency, or what you're calling you can call it your emergency preparation, is a different line on itself. So that means every month you're planning, I want to put aside 200 cedis every month in case of an emergency, in case of a contingency event that happens later on. So that's an actual line that you would put, right? Yes, so the younger you are, the more risk you should take, because you have a longer period to recoup any losses, and then you have time on your side. If you're about to retire next year, I wouldn't recommend any high-risk investments, because you could basically lose all that you've worked for throughout your working life. Yeah, so that's correct, Jack. Were there any other questions that were sent to Drive to Inspire privately that we may ask, or? I think you're muted, or any other questions?
No question was sent directly to us.
Okay, all right.
Okay, so if there are no other questions, then Catherine, we want to say a big thank you to you. Thank you for your time. Thank you for sharing your knowledge with us. We are grateful for your time. Please do well to fill the forms. We have the link to the survey in the chat. So please do well to fill out the forms. If you have any other question that you would want Catherine to address, you can send it to us and we'll connect you to Catherine. info@drivetoinspireafrica.org. We'll connect you to Catherine. And also do well to follow us on all our social media handles, Drive to Inspire Africa, Facebook, Instagram, TikTok, LinkedIn. Do well to follow us so you can get to know all the programs we have lined up. Next month, we have other interesting topics coming up. August, we have an amazing one coming up as well. So we'd love to have you all on board. So the survey link is there. Our email address is also in the chat. Please fill out the survey and you can send us any questions to our email. Thank you so much. Thank you for your time. Thank you for joining us for this evening. We'll see you again very soon. Thank you.
Yeah,